Hey everyone, welcome back to another How To with Ziad and Mia. We're super excited because once again we've changed up our setup. If you can't tell, we got these fancy mics and we're doing it together, a more podcast format. But we're excited to do another episode for you. Thank you for coming back. Make sure that you follow us on social media, on Facebook, on LinkedIn, on Twitter, on Instagram, TikTok,
all over.
YouTube. Subscribe.
Yeah, thank you guys so much. Really appreciate all the support. Really excited for this new format as well. Episode 18, I believe.
That's crazy.
Yeah, unbelievable. Let us know what you think about this. If you want us to keep it this way, if you think the old format was better, but we want to try something new, especially since we got a couple upgrades here in the media room, and so looking forward to this episode a lot.
Yes, and just remember that everything that we'll be talking about should not be taken as personal advice. If you have any questions about your specific situation, please go and contact your financial advisor. One real benefit to real estate is that it's a real asset. So it's something that you can go to and you can make improvements. You can see how it's doing. You can live there if you want to. And you can check, you can make minor adjustments, fix anything that needs fixing.
Yeah, exactly. It's something tangible, something that you can feel and you can live in. That's really big emphasis for people who really like real estate as well. The big issue there is obviously you kind of have to check up on it, upkeep it, all that stuff, which we'll touch on a little bit. With stocks, not so much. It feels not as tangible. Generally you're buying something, especially with technology these days, it's through a website, you click a button and then all of a sudden you own a company, right? And so it's hard to believe that has a lot of value or a lot of wealth to it. And puts people off a little bit, but still a valid investment nevertheless.
And then I think it's interesting just to talk through the different ways that you will make money on your investments. At least with real estate, it increases in value. You're getting rental income, and then you can also depreciate it and have a tax break. So you expect it to increase in value, and that's why you're investing in it in the first place. And if the rental income that you were receiving were to go up proportionally to the amount the house is going up, which houses, at least in California, go up 6 to 7% according to the housing price index.
Yep.
Then you'd be receiving more and more rent every year. So your rent would be increasing and your house would be increasing in value.
Yeah, that's ideal, and a lot of people view investing in real estate as more of an income generating type of investment. You're collecting that rent's ideally going up. That housing price index number we took from taking back the past 30 years, basically houses in California have gone up about 6.5-7%.
And I think that's why it's kind of like the end all be all, is because people think like, oh, investing in real estate is the best way because I'll be getting extra money every month.
Yeah, exactly. But also you have to account for those expenses that come with it, right? If you're renting out, that eats into your rental income. And really the big thing is when you invest in stocks, you can make money the same ways, right? Obviously with any investment, you're expecting it to go up in value. The big thing with stocks and bonds, especially stocks and investing in the market, is that people view it mostly as just a change in price. When you think, a lot of people think of those moments where your investment goes up 20, 30, 40% in value in the span of a couple months because a company had a big break or had a great quarter or a great year. But also you can collect income from investing in the market as well. A lot of people don't account for dividends, which is a company's way of passing on its profits to its shareholders. They take a chunk of their profits and they reward you for being an owner of that company. And so that's income that you're collecting generally every quarter as well. Or if you invest in bonds, you're going to be collecting income from there too. They have the interest payments that come straight to you. The big thing here that I think is beautiful about investing in the market compared to real estate is that you can change how you structure your investments depending on your goals, right? If you want to pursue more aggressive price growth, you can invest that way. But you can also structure your investments to be bringing in more income rather than trying to shoot for that huge price fluctuation or price increase. And so you can create a portfolio that brings in income just like a house does, right?
Right.
And so I think that's a big thing, is like when you invest in there, you're flexible with how you invest. And also just to talk over how much stocks have gone up over the past 70 years, the S&P 500, which most people relate to as the American stock market, has gone up about 11% every year for the past 70 years. And so that's a lot higher than that 6 to 7%. Beyond that, with real estate, there is a bit of tax efficiency as well. I think we wanted to touch on was just you get to depreciate the value of your home and use that as a tax benefit, deduct that from your taxes. Both stocks and bonds and other ways of investing in the market, there's tax efficient ways there to also save money on taxes. You can invest in municipal bonds, which have tax-free income. You can invest in, or you can tax loss harvest, which is a strategy that we used and talked about in a previous episode. And if you're investing in general, you're taking advantage of capital gains. As long as you hold your investment for a longer period of time, then you're going to get lower taxes for the increase in value of that investment. Something that we also touched on in another episode.
Yes, and so we're talking about holding these things over a period of time. So buy and hold is a strategy that you can use with investing in the market. But if you think of buying and holding, let's say in terms of real estate, that would be like if you were buying a house and then you plan to have it for 30 years or plan to pass it down through generations. Now, buying and holding in real estate isn't that great because it's gonna require a lot of work. You're going to be getting those 11 p.m. some water pipe broke calls, and you're going to have to be responding to it. There's constant upkeep, there's constant upgrades happening to the house to keep it, a high price on the market. It's definitely time consuming. Exactly.
And that's the big drawback. It just takes so much time and effort to be maintaining this asset. While with the stock, you don't have to deal with that. That's going to be going up in value. And as long as you're investing in good companies and believe in those investments, you're going to be fine, right? And so that's great. It's a lot more hands off in terms of getting your money growing.
Yes. And then also, in terms of transparency, I'd argue that it's harder to really know everything about a house that you're buying. Same with, buying most things, honestly. But when you're buying a house, there's a lot of things you don't see. So electrical, for example, in the walls. My parents bought our house, and there's no real way to tell that your electrical is messed up until you're breaking into a wall because you're planning on expanding or moving walls around. And then we found out it was just like a huge problem happening throughout the whole house. And there's a lot of these hidden things to houses and hidden things to, things like cars when you're buying it, that there's just no real transparency. You're never going to be 100% sure that really everything about the house.
Exactly. It's a lot easier when you're buying a home or buying, something like a car, right, to sweep things under the rug or have things go under the radar. And so with stocks and bonds and companies, that you're investing in, that's not possible, really. Public companies have to release thorough financial statements every 3 months or every quarter. There's a lot of scrutiny on these companies. You have hundreds of people who are looking at how Apple is doing and the different aspects of Apple, right? And so as a good example. And so you have a lot more access to information, so you can better assess whether that investment that you're making is at a proper valuation or is worth the money that you're putting in there.
Right. And granted, I think it does also, but it does depend on if you know what you're looking at when you're reading these financial statements. And if you don't, then that's definitely a reason to be contacting a financial advisor to help guide you through what these complicated numbers mean. Another thing for real estate is that the amount of capital needed for real estate is pretty high. Mm-hmm. Down payments are usually 5 to 20%. But that downside could also be a benefit because you can be super highly leveraged and basically receive a large loan for a low interest rate.
Yeah, exactly. The big thing here, and this is another big benefit with real estate, is the fact that you are able to put in less money but still get a decent return. A good example that I would use is, say you bought a home in LA for like $1 million. That's honestly on the low end for LA. But if you bought a home for $1 million and you're putting down 20%, you're only investing $200,000, right? Rent generally is around 3 to 4% of the value of the home. So if you're collecting 4% interest on $1 million, you're collecting $40,000 in rent, right?
Right.
But you only put $200,000 down. And so that's the beauty, is because $40,000 is 20% of $200K. And so technically you're getting that 20% return. While you do have that loan that you need to pay off, that's still a really high amount. And so the big thing to note there is that, you have costs that eat into it, those maintenance costs, that mortgage payment, those tax payments, all those kind of things eat into those returns, but it's a benefit that people think of. But again, investing in real estate, you are tying up so much of your money into one asset that's really hard to get rid of as well. Stocks are really easy to get invested into, especially if you're buying into mutual funds or ETFs. They're relatively cheap. They allow you to be diversified. You don't have to have a few $100,000 to get invested. You can start with as little as $100, right? And so it's a great way to make sure that you're building wealth, maintaining wealth, and continuing to grow from there. And so it's really important that if you're going to be investing in real estate, you understand that you don't tie up your money into just one asset that's going to take months to sell if you need that money as well, right? And so
right, not very liquid.
Not very liquid at all. It's another big con when it comes to investing in real estate is that if you need that money, it's going to be a bit before getting it if you have it in a home. With a stock, you get that in 2 to 3 business days. It's easy.
Yeah, and let's kind of talk about the little mashup between investing in real estate but not owning a physical property.
Yeah, we do this a lot for our clients. Some people, they don't want to have to deal with the headache that comes with buying real estate and managing real estate. And so we'll invest in what's called real estate investment trusts. Basically, these are similar to like a mutual fund or an ETF. You basically pool your money with thousands of other people, and you have that money that's pooled invested in a portfolio of real estate. And so there is a company or a trust investing that or managing that real estate portfolio, but they have to give back 90% of what they make at least as a dividend. And so you're collecting this income from these real estate, and it's a lot easier to get rid of than selling a home, right? And so
absolutely.
It's that nice flexibility of still having that exposure into real estate in that realm while not having to deal with all the cons that come with investing in real estate itself.
So that was our little rundown on the differences between investing in the market and investing in real estate. I hope that we helped to clear some things up. And definitely, if you have any questions, don't hesitate to reach out to us. You could call us at 310-441-9393, or you could always DM us. Let us know how we're doing. Let us know if you like the new format. Give us recommendations for future episodes. Ask questions. We want to hear from you.
Yeah, exactly. And we know that a lot of people do have questions in terms of investing in the market versus investing in real estate. And we're here to help. We want to make sure that your investments are complementing each other and are working together to create a plan that's great. So reach out to us and we're happy to help out.
Yes. And happy Thanksgiving, everyone.
Yeah. Have a great long holiday weekend.
See you next time.